We're going to go ahead and get started on this tech talk. So if you're in this room and are interested in hearing about an innovative player in the DLT and settlements infrastructure space, I'm here. My name is Nili. I'm an Accenture senior manager in the digital currency strategy practice. I've spent the last couple of years studying the financial services sector in terms of, in the context of research, industry research, as well as focusing on central bank digital currencies and stablecoins. So really excited to be joined here by Ravi and Ronn. I will let them introduce themselves, and maybe Ronn, we'll start with you in your introduction.
Sure. I'm Ronn Baker. I over sales for Baton Systems in the Americas.
And I'm Ravi Madduri. I'm the head of product at Baton Systems, based in London.
Cool. So what is Baton Systems? Ravi, maybe we'll pass it to you to give us the brief synopsis of Baton Systems.
Sure. Thank you. So Baton Systems is a company which has been 7 years in the making. And the focus of Baton Systems has been very much about trying to streamline the problem that participants have with post-trade settlement. So doing a trade is the easy bit. The settlement is where a lot of the settlement rails and the complexity that starts to come with it. What Baton Systems has done is basically, the vision for Baton Systems is for a wholesale post-trade kind of environment powered by distributed ledger. And the whole idea here is that where any asset type can be settled synchronously and instantaneously. And so we took that as a problem statement and we kind of went about solving it. Fascinatingly, over these years, we have accumulated about a dozen of the largest tier 1 banks, and they use our services for settlement across cash and across securities. So we are fairly asset type agnostic in terms of the settlements. Now, and the way the company has been evolving is we built a few of these settlement layers. We do kind of workflows for payment settlement, FX settlement, liquidity management, and for securities, predominantly in the collateral management space. So that has been the area that we focused on. The reality is that while we went about deploying our permission ledgers to our customers, we recognize that there is a huge amount of legacy that we have to work with. And so one of the things we are very proud about is how we made that integration or the interoperability with those legacy legs, existing gateways of our customers work towards the end-to-end solution. And where we are right now is we've used some of those experiences to start developing building blocks on which our clients are able to kind of easily build their own workflows. So that's the journey of Baton and what we've been doing.
Yeah, and I think when we spoke a couple days ago, I think the striking thing about Baton Systems and the focus is the industry problems that we're trying to address, right? For me, my focus has been in the wholesale space, and so this resonates very well. Everything about FX settlement risk, operating hours, liquidity risks, these are all things that our clients are constantly asking us about and how to address. So maybe, Ron, I'll turn it to you, and maybe you could discuss one of the key challenge areas around disparate settlement cycles and how Baton Systems is using its product to help their clients address that.
Yeah, that's a great question. I think first is taking a step back and just seeing what's going on in the industry. We know that the financial market infrastructure needs updating. The capital markets and wholesale markets, it's risk intensive, it's fragile, it's expensive. Settlements, in the case of cash settlements, and many times is made blindly, without the understanding if the counterparty has fully met their obligations. So if I have lots of outbound payments that need to be done, I go ahead and make them, and we don't really know what's happened until the next day when reconciliation cycles kick off and we find out who's failed to make their obligation. To understand how big the problem is in settlements, each day 2.2 trillion in the FX markets is settled without the benefit of riskless settlement. So the 2.2 trillion is done at on a risk basis. 940 billion margin is trapped for securities and cash, and about $300 million it takes to run a bank from a liquidity perspective each year. So there's a lot of things that go into it. It's very expensive. It's only going to be compromised or be compounded, I should say, when T1 comes into play this May. So the industry is going to be dealing with that. So from an internal perspective, what banks are dealing with is a lack of interoperability internally with their platforms. You might have 10, 20 different siloed platforms at a large institution. Those platforms do not speak to each other. The business lines do not speak. There's lack of visibility across the different counterparties. And so what Baton is doing is empowering banks to help banks take control and address risks, capital, and liquidity issues that they face with on a daily basis, and also help transform manual processes and automate those, which make them a lot more efficient and make them a lot more money. So as a summary, we're helping eliminate multiple risk for institutions. Counterparty risk, freeing up intraday liquidity, helping reduce settlements from 24 hours to 48 hours down to minutes. And then we're also helping them make safe settlements across all currencies and across all counterparties.
Yep.
And sorry, just to add to that, I think Ronn's being too kind in saying in minutes. We have what we call a change of ownership, which is instantaneous. Usually the minutes come into place where the actual payment goes through the SWIFT network. So, and just to add to that, some of the industry challenges that we are trying to solve in Baton. First things first, a permission ledger or a dispute ledger is a technology play. By itself, it can't solve anything. That's been our going-in clause. And we've always believed that there's a fundamental need for us to understand the risk behind that settlement, the compliance needs behind the settlement, the legality behind the settlement. And so what we've done is painstakingly invested in a rather comprehensive rule book that actually underlines the settlement process itself. The technology is easy. I'm not a technologist, but I understand it's very easy. The reality is the Baton rule book is what actually drives the business. We have some clear definitions, legally supported definitions across multiple jurisdictions for the currencies we settle, for where the counterparties or where the banking participants are. Clear definitions in terms of what is a settlement counterparty, what is a settlement bank, what is a settlement account, what are the settlement currencies, definitions in terms of what are the entry criteria, what are the exit criteria. We can also kind of look at some of the exceptions behind it. And basically that rule book is codified. It's legally enforceable. And it obligates every participant in the chain to kind of adhere to the rule book. And that is what actually keeps our the FX PVP capability on the ledger operate so smoothly. The other thing is, as I said in my previous comments, interoperability in terms of the first mile, the last mile has been paramount in our minds. Banks will not just do something because I say, hey, I'm going to throw in a DLT node in your firewall is not the end game for them. They still want to kind of access payments using the old MT messages or the more of the XMLIS or 22 messages. So we made sure that whatever we do is compatible on the first leg and the last leg with what is the reality in the industry. And last but not the least, why is anybody doing this with us? Settlement finality. That is the crucial reason why anybody is working with a DLT provider like us. And whether it is instant settlement, it is non-repudiable settlement. So these are things that we really kind of worked on as the technology started to evolve. And in fact, back in 2021, so CPMI said we are the only private solution provider who is live on FX PVP on the distributed ledger technology. And we also work with quite a few regulators. We work with quite a few regulators fairly actively. One of them that comes to my mind is Bank of England. They have an RTGS renewal program, and we've showcased our capabilities with them, and then kind of we talk to them.
Very, very interesting. A lot of great insights from both of you. I think what's really powerful about this particular talk is that we're always told that DLT, new payment rails, are going to create new efficiencies. So I think combining what Ron had said around the compression of the settlement cycle globally, this race toward T+1, and who knows where it goes from there. It might become T0 at some point. Is going to inevitably cause some breaks for some market participants may see some breaks in their systems, i.e. settlement failures, et cetera. So I think the solution that you guys are offering is seeking to optimize post-trade operations to reduce settlement risk and operational risk for clients. And then I think, Ravi, you had gotten into one of the key things I wanted to unpack a little bit more, which was this rule book, right? So we're always told that there's these new rails that can be implemented and they will, create efficiencies, but we often forget that there needs to be a legally enforceable settlement mechanism in place, which is likely a contract, right? Or a set of agreements between a mutual agreement. So one of the things I wanted to ask you, Ravi, and perhaps Ron, is maybe tell us a little bit more about the development of the rule book that you had built for Baton Systems. What were some of the lessons learned? What are some of the key components of it?
So one of the big things that it's important for financial institutions is that if we're going to be settling with each other, what determines settlement finality? So if I'm going to go to a venue and I'm going to be settling, I want to make sure that if the counterparty doesn't meet their obligation, what recourse do I have, right? And so those mechanisms, up until a couple years ago didn't exist, and Baton is actively doing it. So the benefits of that is that we're now settling into emerging markets. We're actually settling CNH, the fourth world's largest currency, most active currency. We're actually doing PVP settlement, and PVP settlement is the condition or the mechanism that one party doesn't get paid until there's proof that the other party has also met their obligation. And once that happens, and only once that happens, do you then settle. So just thinking about as going forward, as we go into Latin America, into Africa, and to the APAC region, where there's a lot of currencies, again, 2.2 trillion, that are not settled, they're settled daily, that lack the benefit of PVP settlement. It's one of the huge benefits. And as we go to T+1, it can be done today, right? So PVP settlement can be done today and can help these organizations who don't yet have these mechanisms in place be able to make that done.
Yeah, and as part of some industry research that's been going on around settlement risk in FX markets, it's clear that it is growing, right? And one of those causes is the limited accessibility and affordability of PVP arrangements globally, right? And so, everything from the exotics applicability to PVP arrangements today. So I think your solution, I believe one of your most successful products is Core FX, and that is the exact problem that you guys are solving, right? So maybe, Ravi, we'll pass to you on sort of the ways that Core FX generates those efficiencies. And I think we had discussed some elements of, netting 24/7 and those types of things.
You already said it. So, see, besides the technology play, besides the legal kind of framework, one of the things that has really been driving us is trying to democratize the whole process of FX PVP. Because there are schemes where they insist the participant to have a central bank account. We don't. We actually work with our customers who can actually have commercial banking accounts. Two, even though we've got schemes which actually do the PVP settlements today, typically a settlement actually happens anywhere between 6 hours to 48 hours. That is 6 hours of liquidity. That is 6 hours of FX risk, right? And granted, there may not be so much counterparty risk, there still is. When we talk about doing an instant change of ownership, 3-minute settlement, we are actually addressing that in a big way. I mean, the risk is there for maybe just those 3 minutes versus the 6 hours or the 48 hours. So there's a few things that we looked at. Then the other thing we looked at also is that not all counterparties and not all currency jurisdictions are the same. So how do we start looking at, kind of settlement strategies? Like if it is payments going into Hungary, then that has to be a split payment, so payment splits. Counterparties kind of agree around the table in terms of whether the netting has got to be a bilateral netting or a multilateral netting. Is it a currency pair netting or a multi-currency netting? So we enable each of those and also enable multiple netting cycles, sequential netting cycles to the day. And in doing so, we actually kind of help our customers conserve that very precious liquidity. So if you start looking at the Nostro requirements, it really comes down big time. So these are the few areas that we actually looked at doing.
Yeah, and I love the term settlement strategy because that's becoming more and more the pervasive objective, right? Because we have a multitude of systems, tokens, currencies that are becoming available, right? And not only the payment instruments are being innovated, but compliance laws are regularly changing. So I think one of the interesting next questions I wanted to ask you guys was the notion of helping your customers connect all these systems together, right? The DLT-based systems, tokens, account-based systems, et cetera. You know, how is Baton helping clients bring all those together to help enable some of these settlement strategies, which are really founded, I think, in creating efficiencies, right? Making sure that you can achieve settlement in the most efficient way possible with the instruments that you have to your disposal.
Yeah. So Baton, what we've done is we've taken a look at, trying to solve for the key components of the financial market infrastructure. We've got connectivity to key components like CCP, so think, OCC, ICE, Eurex, and so on, custodians, nostro accounts, matching venues, and so on. And what we see is digital currencies and digital assets. It's just another asset type. It's just another venue. And so if we can help our banks, our institutions connect natively into those, then it helps them, right? So we've solved that piece for them. And then on top of that, what we've done is we've connected natively into their client gateways. So the Calypsos, the ACIs, the Finasters of the world. So when they do go ahead and issue that payment, they can do so seamlessly knowing that there's a direct connectivity that we've provided on the back end. So it's really important. I used to say that I used to work for Wells Fargo, spent 15 years there. If you can deliver an asset immediately, it's great. If you could do it once, okay, great, that's good. Can you do it 1 million times a day? Can you do it 5 million times a day? Banks have struggles internally. And if you can't have all of the systems internally speaking with each other in real time and speaking seamlessly, what have you really accomplished, right? You can deliver one thing immediately, but you need to do this 5 million times a day. That's how big these institutions are moving things. So with our smart workflows that we've provided and with the connectivity into the key components, we're able to help those transactions at that scale be able to happen successfully today.
Yeah. And just to add to that, I mean, the kind of tools we have built, we call them building blocks, which are basically modules, but these are fairly modules which allow customers to build their workflows on top of. One of the things that we make sure is that the visibility of the assets, whether it is kind of collateralized assets, is very clear to our customers. They know exactly where each of their collateral is sitting, and we then kind of help them understand as to what is the most efficient deployment of that collateral. So in doing so, we are effectively releasing a lot of their balance sheet back to them, right? There's a cost of capital, whether it is any asset deployed there's a cost behind it, and we're trying to minimize that cost. And the way we do that is also fairly interestingly, it is almost we aim for a low-code, no-code kind of ETL approach towards integration. Again, this goes back to the whole fungibility of the old versus the new. So that when a bank comes in and says they want to connect to a particular venue, we can do that in a week, 2 weeks max. They're live.
Great, and there's a lot of, the question that comes to my mind of all these the value cases that you guys are describing, it brings me back to the title of our session, which is DLT, right? So I wanted to maybe ask, why DLT? Why do we need to use that to realize this value? What sets it apart from more traditional infrastructure?
Well, I mean, the technology enables us to, kind of for a secure, transparent way of doing a transaction. It enables you to kind of decentralize transactions without any kind of central authority. It's a distributed authority. These are stuff that really enables you to kind of connect. The other thing is about building transparency. The existing rails, there is no transparency when it comes to the routing of an asset. As a result, there is opacity to the pricing for that routing. And last but not the least, the settlement finality issue over there. And we're trying to kind of, DLT enables you to kind of solve quite a few of these, kind of immutability, real time, So it's all the buzzwords that we've heard, with respect to CBDCs, actually also in some ways also kind of comes into the whole distributed ledger kind of space. And that's why while we work with regulators, while we work with the industry players and everybody else, we decided that the best way to kind of show the output to the industry is by finding a niche problem statement and then solving for it. And I don't think we ever went down, let's find a DLT solution, now go search for a problem. That was never the case. There are solutions in Baton which does not use DLT, by the way, and that's absolutely fine. The technology has a relevance to certain problem statements that we identified. The FX PVP certainly is a space where DLT made absolute sense for us to go and deploy.
Yep, thanks. I think that's on everyone's mind right now is, do we need to distribute or not, right? So I think it was a very well put position on that as far as Baton Systems products. I think we're running out of time, but the final question I'll pose to both of you is, where do you see things going in the future? How do you see client demands evolving given their realization of this value? Where do you see the puck going in terms of the demand for this type of product?
I definitely see it's going to grow. There are definitely a lot of use cases where digital assets will benefit the capital markets and wholesale markets and down to the retail clients. And I think the important thing is that the train has left the station, right? And it's rolling down the tracks. You can't stop it. Finding ways to embrace it in a safe way where there's just good governance and there's good legality to it, that's where banks need to be. And I think that's where they're going to want to be, but it's got to be done safely and it's got to be ultimately done for the benefit of our customers.
And to add to that, we are here, obviously we want to sell our solutions, but also we are looking for collaboration. We're looking for collaboration with a number of industry players. I can say we don't look at an asset as a cash asset or a securities asset. So we look at it as kind of an asset type. And honestly speaking, the day CBDCs really start coming of age and you got stable coins coming of age, that's just another asset which goes through our flows. And this is where a lot of our conversations, whether it is with digital assets or with a few other players out there, the discussion has been about how can we bring in our distributed ledger solution to actually move your CBDCs across.
Okay, well, this has been fantastic. It's always good to get a real-life example of success in the market as it relates to the future of payments. So very, very happy to have you guys here, and thanks for your time. Appreciate it.
Thank you.
Thank you.